This is DeAndre with Black Wall Street Academy. I'm back again with another video on how to avoid market manipulation, how to avoid this right here, this choppiness right here, this consolidation, some of you may know it as. For me, with my institutional trading, this might be, let me zoom out. This is the accumulation right here. This is possible, you know what I mean? Like that, everyone knows it as differently, but anyway it goes, you know that the banks manipulate the markets. If you don't know, then you need to, Google it. I'll have a video covering it in a little bit. But for now, we're going to just show you how to avoid choppiness in the market. There's always that period of time where you're kind of wondering, why did my stop loss get hit when you place a trade? And it's because you get caught in this. This right here is consolidation. You know what I mean? This is the market's not definitely going definitively going up or down in any general direction. It's currently just very sideways. Or basically from this point on, if it'll have me, basically from this point on, it is very sideways. It wasn't really going up or down. It was pretty neutral right here, I guess you can say. So with that being said, you don't want to really get caught in ranges like this or consolidation, however you were taught so far in your trading journey. Um, you don't want to get caught in this because you want to get caught in a definitive trend. Normally, after a big trend happens, right? Normally, after a big trend happens, there is a lot of consolidation that ends up happening once that big trend comes to an end, and there's normally a reversal. So technically, right now, for me, this would be redistribution since this is going to be a sell for the next 5 days. The overall trend is bullish, so this is just a small pullback, and then it's going to end up going back up. So with that being said, after New Year's, I am looking for a sell on Great British Pound New Zealand dollar. And I am going to swing trade that and see if I can get 3,000 to 5,000 pips from that swing trade since it's going to be going down the next 5 days. Um, so I have an indicator that literally just helps you avoid choppiness. Okay, it helps you avoid choppiness. This right here, it literally tells you that it tells you, hey, if you once this indicator meets these parameters, that means that the market is actually trending in the direction. And if it's at these parameters, then that means you need to stay away from the current trend. Do not place trades. It literally just tells you all you have to do is learn the parameter. So first thing you're going to do is you're going to go to this FX right here on the trading view, and you are going to click that, and you're going to search up. It should be in built-ins choppiness indicator. So choppiness index right here is you just type in chop and it should come up. Make sure you just add it to your favorites and then add it to your chart. After you have added it to your chart, you by default will not look like this. You can change your colors accordingly. The settings are on the bottom left corner right here. If it'll even show me, sometimes it likes to not show me. Whatever. The settings for you will be in this bottom left corner right here. You'll be able to change the background, the actual color of the actual the line here, and I'm going to tell you what these kind of parameters mean. Let me see if I can get the actual settings to pop up real quick. Got me? You got me? No? Okay. Give me a moment. Let me see. All right, whatever. So by default, you'll have a few lines right here. You know what I mean? You'll have it set right here. So after you set your colors according to kind of how you like your charts, some people like light charts, some people like dark charts. I personally like dark charts, so yellow sticks out to me a little bit. So I kind of made it like a yellowish color. There are two kind of dotted lines you see here that are kind of stand out that are white. There's one on top right here, and there's one on the bottom. So the idea behind this indicator is that if this current line right here is in a certain range, according to this here, you can see the number on the right, the 49.18, the 57.32. According to those numbers, if it's within the range, then it is going to be above or at a certain point in this indicator right here. And if it's going to be trending in an actual direction that's going to go, then it's going to be below that certain point. So the idea behind it is that it's not directional. So if it's going up, right, if the train was getting ready to blast up, this is still and actually take off from here, let's just say, for example, this is still going to show this on top going down into the actual going deeper into the numbers here. So the idea is that there are two numbers right here. There is one that's going to be 61.8, right? So 61.8 is and above is the range where so you have 61.8 to 100. So you can see right here, this is essentially the 61.8 level. It says 61.75. I'm not exactly on it, but this is a 61.8 level. And this right here below here is the let me see, 38.2 level. I believe it's 38.2. So you have those two levels right here, the white lines, and by default they will be set just how they are. So don't just change the settings at all. Just change the color of your actual lines right here. So the idea is that once it's above at 68, 61.8 or above, it is considered consolidating or ranging, right? Just like this, you can see right now that the actual trend is just barely getting below 61.8 and it's been ranging for a while. It wasn't really going up or down. It's been in a sideways market. And now it's just now when the market froze for the holidays at 58.43. And then of course you have the actual middle ground, which is the 50% level, the 50.00 level of this. You really want to look for it to actually be coming down. The further away from 61.8 it actually is, you can look on the right and look at the numbers changing, the better. Okay. So that is a good thing. So whenever you see consolidation like this, you can use this choppiness indicator in those kind of few parameters that I just laid out to actually filter out choppiness and know exactly when to enter the market and when this BS right here is going to be over. I actually use this in my trading every day to whenever I see ranges like this or consolidation, like I said, however you were taught so far in your trading journey. Whenever I see ranges like this, I actually wait for this actual choppiness to be over. So I'm gonna look at a few more examples with you guys real quick of how this kind of indicator works. You can see, let me find some more choppiness real quick. Boom, right here. You can see that it started to get really choppy right here in sideways market, but also it actually started, it shows you that at the time of this current trend, you can see that this was well above, actually, if it'll actually, come on, today's not my day, get in there, that it was actually well above the 61.8 level at the time of the trend. It was actually way up here at 71. So the closer it is away from 61.8 and the closer it is to 100, the more choppy the market currently is. So if you're looking for something to break out, the second is dipped below that 61.8 level and is showing signs of actually staying under and continuously dipping under as the trend progresses, then you know that there's gonna be an opportunity extremely soon, and that the momentum currently, let's just say right here, you're looking for a buy and you did your analysis correctly. You can see that right here in this area on this candle right here is where the market actually pulled back, and then you had a rejection that went surely to the upside right after that. Like I said, this is a non-directional indicator, so that means just because this is going up doesn't mean that this is going to be going up. This doesn't go based off of the actual direction. This just shows you within the parameters that I just set out for you what's happening in the market in terms of choppiness and not choppiness. Okay, so we have one more number that you kind of got to remember. That is the 25 level. Let me zoom this out. Whenever you're here, where my crosshairs are at the 25, that's considered a market reversal point. Whenever the trend is way down here, or this indicator is showing that the choppiness index is showing you that it's way down here at the 25 level, that's considered a reversal point. Okay, that means the trend could possibly and most likely will reverse when it's down here. That means the choppiness index is letting you know that whatever current trend was going on is weak, and that this is most likely going to reverse, and you just use price action to determine whether it's going to reverse or not. So another part right here I can show you is an example of where it was ranging at this point in time right here. In this area, it was well above, it was at 76.44 actually. And what was it doing? Very choppy. And then once it started to actually go below the 61.8 level and get below the 61.8 level, not only then it started to actually trend down and come out of that choppiness, as you can see. So a few more examples real quick. Right here, boom, at this current candle right here, let me zoom in a little bit more so you guys can actually see. This was a very choppy sideways market. At the time, it was kind of dipping below and then coming right back up, you know what I mean? And just for the most part staying above. So you can see right here, it wasn't until this point right here when it really dipped below the 61.8 level, that it actually sold off really hard, and you could have gotten 400 plus pips right there on the 4 hour for a nice swing trade. So another example, real quick, is I mean, it's the same thing. I can repeat this all day, but I like to do multiple examples so people get it. Okay, so zooming in, we're at the time of this current trend right here. This whole thing, where was this choppiness index at? It was above 61.8, showing that it was really choppy, and price action actually reflected that. Then what happened? Then what happened? It dipped significantly below 61.8 in this area and started to trend upwards overall. So you could have waited for a pullback and check this for confirmation to confirm, like, yeah, this is staying below 61.8, and waited for the pullback and the rejection that happened right here for it to actually go up. So you could have used a basic break and retest method to actually snipe this buy entry, and it would have been a good time for you using a basic 2-to-1, 3-to-1, or 4-to-1 ratio. As you can see right here, as it went up, the indicator showed the actual the graph, the line dropping below 61.8 and very far below 61.8. All this momentum right here to the upside is showing you that 61.8 was broken. It got below that, well below that. It actually got down to the 30 something level, and then it shot up from there. You could have caught in this momentum right here for almost 500 pips, probably 500 pips if I would have dragged it up a little bit more. So, I mean, you get the point. Set those parameters for yourself when using this index. So I just wanted to like kind of give you guys this index that I do use to determine choppiness. You can see the accuracy of it. Every time that I've showed you that it dropped below 61.8, the actual trend took off. And every time that it was above 61.8, and like I said, the closest to 100 it actually is, because this goes all the way to 100, as you can see on the right, 100 plus. The closer to 100 it is, the more choppy, and the closer to 61.8 it is, and below, the less choppy the trend is. That means the trend's most likely getting ready to take off. Another example right here was pretty choppy, decently choppy, but it was basically right at the 61.8 level several times, and it kept dipping below, came back up, approached the 61.8 level again, just about. And then once it dipped really hard below, what happened? Boom, trend shot up. You could have sniped a buy entry right there. Same thing that happened here. The sell entry you had right here, choppy market. It was above the 61.8 level. Boom, what happened? It dropped below the 61.8 level, well below it, started to, and then price action actually showed you that this was actually breaking out. So you could have sniped a sell entry at any point on any of these candles and got a proper entry on that. Like I said, this is a non-directional indicator, so it's not going to it's a non-directional indicator, so this is not like up or down in accordance to the trend. This is like, is it above 61.8 or below 61.8? You know what I mean? Whether it's a buy or sell, it's going to show the same thing. If it's choppy, it's going to be above 61.8. And then when that buy or sell starts to break out, it's going to go down every time. Um, so yeah, that's pretty much that indicator. So that's a really, really good tool to avoid choppiness, so you're not caught in the market where you're entering a sell right here and then it just consolidates for 34 hours and you then got stopped out of your actual position because you're in the middle of a liquidity run. So this is really how to avoid manipulation from the banks. Like look right here, choppiness. It was above 61.8. It broke below 61.8. If you look to the right here, below that dotted line, and actually showed signs of staying below. What happened? Price action actually matched that, and coming out of this consolidation or liquidity run, however you were taught, whether you're institutional or retail, what happened? It came up, you had a retest, boom, big institutional candle, and it shot up from there. This works every time, as long as you know how to read it. So real quick, one more time, the parameters: 61.8 level right here, right? And you have the 38.2 level right here, or 38.2, 38.3 level right here. As long as it's the further uh, up and away from it is, and closest to 100 it is, from the 61.8 level, the more choppy it is. So this is mad choppy. If it's in the 70s, it's going to be really, really choppy, obviously. So closer to 100 it is, the more the more choppiness it is. So you can see right here how choppy this was when it was just barely above 61.8. Okay, so the further closer to 100 it is on the right here, the more, So you can just use your actual crosshairs to just put it wherever the current part of the line is to see where it's at. engage and make an actual buying or selling decision, and use this as a confirmation that this actual consolidation or this market manipulation is actually over. Um, and it dropped below and actually shot up, like I said. And then you have this level right here, and when it's below 61.8 and trending more towards the 50, 45 range and below, that means the market's actually trending mad hard. And you know, look for an entry is what I'm saying. And then you have the actual 25 level. Whenever it's at this 25 level or below, that means the market's most likely going to reverse, and that you need to watch price action and actually make sure that matches up. So, like I said, just like any other indicator, even though this is extremely accurate, you need to use this as a confirmation, not as like a standalone. I'm going to buy or sell. Use this to add to your strategy to be like, yes, the market's choppy, the market's not. So I actually struggled with this for a long time. I mean, my trading, just being able to identify how to, not place buys and sells during ranges, and I was getting stopped out of a lot of pairs when I actually um, was, learned deeper into trading and learned about bank, manipulation and stuff like that. I actually found this indicator and I decided to share it with you guys. This is some pretty exclusive stuff, so I'm actually very surprised that I'm putting this out. This is going to solve a lot of problems for you guys. But that's pretty much it for this video. If you have not already, go like and subscribe to my channel. Turn on post notifications while you're at it. I have my social links, my links to my Instagram down in the description.